Hey everyone, here is your 2022 housing market in review, as well as 2023 predictions of what we may see from the housing market in this upcoming year. What a crazy roller coaster ride of a year in 2022. That was definitely the most interesting housing market that the Bay Area has experienced in a while. Now, December of 2021 felt oddly reminiscent of the housing market in 2017 at the same time. And that's to say, really low inventory, really strong demand, and all of this snowballing into one of the most competitive housing markets that we have ever experienced. 2017, the median sales price was the highest in December for Santa Clara County that it was the entire year. That's very uncommon because it's usually May or June when prices peak in a typical year. And then 2018 began with fierce competition, skyrocketing prices, and when I say that, I mean 20.7% appreciation just from January to May. Now this is all until it came to a screeching halt because buyer fatigue set in and multiple offers disappeared, and prices between May and August, or May and September, they pulled back 13%. Now 2021, leading into 2022, began in a very similar fashion. The median sales price in Santa Clara County in December of 2021 was $1,415,000 for single-family homes, townhouses, and condos. That was the highest month of that year aside from June. And then going into 2022, how did the year start? Really low inventory, really significant demand for homes. My immediate thought was, this is gonna burn itself out just like it did in 2018. This price appreciation just can't be sustained. And at the time, I was only looking at it from a buyer fatigue standpoint. I didn't plan for a war in Ukraine or runaway inflation or the Fed's response of raising interest rates at the fastest rate in 30 plus years. But the timing of those two different markets was very similar. And between January and April of 2021, the prices appreciated by 16.7%, but by August, they had already pulled back by 13%. So while that arc of prices in that 2018 market and 2021 market are pretty similar, I'd say the underlying issues that we're dealing with this time around are much more significant. I mean, I like to focus on the data and not these clickbaity articles, comparing it to 2008. I mean, the conversations that I have with my clients, people I meet at open houses, and certain news sources, I think are very helpful because these conversations I find are leading indicators of where the market might be headed based on the perception of buyers and sellers that are in the market. And this is one thing that I know for sure, is that there's still competition in this housing market. I was actually looking forward to a little window of opportunity for my buyer clients to be able to negotiate on price and terms and avoid some of these multiple offer situations. And that has been true in some instances where you can include contingencies where you couldn't before, or you might be able to renegotiate on price or have the seller provide a credit to buy down the interest rate. But I've been finding that the homes that are in desirable locations, regardless of the condition, are still going to have quite a bit of competition. Now, the interest rates have most certainly impacted buyers' ability to purchase and subsequently affected the housing prices. But those serious buyers are still out there looking, and there is not a lot of inventory. And like I just mentioned, this comparison of the 2008 housing market crash to our current housing market, this is what I see as the key distinction between those two. 2008 saw a flood of properties coming on the market because people realized they didn't have enough equity to refinance. They were trying to sell their properties before, to beat the prices dropping before their homes were foreclosed on. We are simply not seeing that in this housing market. I read these articles and I see people talking about this correlation between this market and that market, and just the inventory tells the story. The number of available properties in July of 2008 alone was nearly 9,200. In 2022, we didn't have a single month with over 22 active listings on the market in Santa Clara County. And with many of these homeowners, sitting comfortably with a 30-year fixed mortgage with an interest rate hovering around 3%, a lot of these sellers that are on the market, if they don't get the price that they're expecting, they simply pull it off the market. I'm not seeing a lot of panic listing or people dumping their properties simply to get out from under it. They're just renting them out or just waiting for that timing to be right. And that's actually the advice that I'm giving to my friends and clients. Timing the real estate market is essentially impossible. You want to sell, I'm sure you would have loved to have sold in April of 2022 when the prices peaked. But so far, the prices have really only pulled back to about the spring of 2021. And as a whole, the year, prices have appreciated 8.4% from 2021 to 2022. When people ask me, how is the housing market? I found myself responding, it's weird. This might not be the salesy response, but I tell people it's probably different from what you've heard, because I don't think it's as easy for buyers as many people make it out to be. It's also not as bad for sellers as many people say. Yes, the prices have definitely come down from the peak, but what really hasn't changed because of the rising interest rates is the affordability. What's that old real estate adage? Like a fair deal is when the seller feels like they sold for too low of a price, the buyer feels like they paid too high of a price. That's about where we are in this housing market. But unless you're buying a property with the intent of like a quick remodel and flip, I don't think that these current housing market conditions are of big concern. And I always use myself as an example. When Lauren and I bought our home, I was looking at the real estate trends and I was like, all right, we may have 12 to 18 months of appreciation or things being flat before the market starts to drop. So maybe we should wait a year. But our rent was going up. We wanted our own place and we were at a point in our lives where we felt like we could handle a mortgage. My rationale was we're staying here at least 5 years. That's usually enough time to ride the ups and downs of the market. I'm happy with this interest rate and the timing in our lives just seems right. Now, within 4 years, the prices had doubled, and I was so thankful that we decided to buy when we did. Now, it could have gone very differently, but I don't think that it would have changed our decision because our underlying reason for buying was still the same. So in summary, I want to cover 3 things that I think are very important for planning and being prepared and knowledgeable about the market in 2023. Number 1, what do I expect in the coming year? Number 2, what advice would I give to sellers? And number 3, what advice would I give to buyers? What do I expect in 2023? I could see prices dropping by about 7% compared to last year, because that's exactly what happened in 2019 after a very tumultuous and similar 2018. First half of the year, prices are insane. Second half of the year, prices correct, and then the next year, prices dropped. The only difference, though, this time around is that the inventory is quite a bit less than it was when that market adjusted. And if we're going to continue to see low inventory, we may not see that significant of a change in prices from where they are now. I could also see maybe the beginning of 2024 being a little sluggish, but again, just that underlying issue that has driven the price appreciation over the last 12 years is low inventory. And the price appreciation that we have seen is 18% annually on average. That's literally $1 million increase in the median sales price in Santa Clara County. There's simply not enough inventory to meet even this curbed demand for properties that we have in the Bay Area. I mean, to start the year, January of this year, there were 633 active listings on the market. I mean, low inventory, that's been a national and even international problem the last few years, but I feel like for the last 10, it's just become the new norm in the Bay Area. Again, if that continues this year, I don't think we'll see too much of a price fluctuation aside from just the typical seasonal trends of things picking up in the spring and summer, dropping towards, fall and the end of the year. Now, I actually thought inventory would start to increase even as far back as 2016 because prices just continue to rise, and I thought, okay, sellers are going to take advantage of this and put their homes on the market. But the conversation I've had and the thing I've heard more than anything else in the last 6 to 7 years is, oh yeah, I'd love to sell, but then where am I supposed to move to? Now, with 63% of my seller clients having moved either out of the area or out of state, I can give you some pretty good recommendations if you're thinking along those lines. But I've found that unless people are retiring or having a job transfer or following family to wherever they've ended up, they're generally content to stay where they are. Clients that I've had that have sold and stayed local, their rationale for selling has usually been because they needed either more space and or better schools. I don't think I've had a single client sell simply because the prices were high or panic selling because they thought that the prices were going down. It's always been a lifestyle decision. And that is what's at the forefront of my mind when I'm asked about, is it a good time to buy or sell? Advice to sellers. Is it a good time to sell? Aside from the spring of 2022, the housing prices for the Bay Area have never been higher. So I would say yes. But there are definitely factors that I think are much more important to pay attention to in a slower market like this. I think pricing appropriately is way more important in this current market. Beginning of 2022, when we had just incredible amounts of competition, you really couldn't price a home at too low of a price. There was enough buyer activity and interest rates were low enough that, the competition and the number of offers would push the price beyond what anyone could really expect. Now, if you start too high, the property is going to sit on the market. If you start too low, you may not have the number of offers that you need to have the price be pushed to that price that you may be expecting. I think at the moment, the best strategy is to price as closely in line with the market value as possible, unless you're trying to really ensure a quick sale by pricing it aggressively lower. Home preparation is the other essential piece of this puzzle. Even in the hottest of markets, I still recommend it to people, stage and paint and redo the flooring when necessary, because these are the things that give you the best return on investment. In a really hot market, the home was going to sell regardless of the condition, but if you were willing to take the time and spend a little bit of money to make those improvements, you were going to sell for tens of thousands of dollars more. And that's because when it comes to maximizing the sales price of a home, it's about that presentation and the exposure to the market that home is receiving. And this is all the more important in slower markets where you may not get multiple offers, you may just have that single offer, and it's all the more important to make sure your presentation and your exposure to the market as a whole is as strong as it can be. Now, again, moving is usually a lifestyle choice, so it's important to know where are you headed to next and have that plan of how you're going to do that transition. And this is how I've been trying to start all of my seller consultations, is focusing on that piece. Obviously, all of that planning usually comes with an idea of what a property is worth. So what I've been trying to do for my clients and friends at the start of this year, and even past clients, is doing an updated market analysis and something more accurate than you would get off of an algorithm-driven site like Zillow or Redfin. So if I haven't put together a market analysis yet for your property, tell me and I'll get that done for you. Advice to buyers. Is it a good time to buy? It is if you're buying a property that you can see yourself living in for at least 5 years. Again, I bought my property with the possibility that prices could drop, but my reasons for buying still apply today. Rents are expensive and they're going up. Interest rates are still relatively low to where they've been historically. We really have been spoiled the last 10 years with how low the interest rates have been. I also think that the Bay Area will continue to appreciate. Real estate's cyclical. We're going to have ups and downs, but there's just too many large companies with deep roots in the Bay Area for it not to just continue to appreciate over the long term. Also, owning your own property goes beyond just an investment, which it most certainly is in the Bay Area. But it's where you relax, it's where you raise your family, it's where you entertain, it's where you enjoy the community. Yes, you can do this in a rental, but I think there's just a difference in how you approach it and the responsibility that comes with owning your own home. Lastly, I'm getting a lot of calls and texts from investors and flippers who are looking for these opportunities to get properties, at a lower price because they're paying all cash. If they see opportunities in this housing market, I think it's all the better for homeowners, or it's their primary residence, who are playing the long game and don't have the same kind of risk that these short-term investors have. While there is less competition on the buying side than there has been in the past, the low inventory can make it pretty difficult to find the property that fits your criteria. That's why I continue the same strategy that I did in really competitive housing markets, and that is trying to find properties before they come on the market. I do this through checking the MLS's members only list. This is properties that don't show up on industry websites like Zillow and Redfin and Trulia, etc. I do this through internal lists that Coldwell Banker has, not only in our office, but in others. I do this through sending personal letters to neighborhoods where my clients want to be, or knocking on the doors in those neighborhoods. I also do this through networking with other agents and emails that I can send out to other offices. I found all these methods to be effective at different points in time. So that's another important service I feel like I offer to my clients, especially when there's not a lot of homes on the market. Now, I understand, interest rates have more than doubled since the beginning of last year. I know that this has made buying a lot more difficult because it's likely impacted the price range that you're able to afford. And while I have seen the interest rate drop from where it was in like October, November of 2022, I don't think that we're going to see, 3% 30-year fixed mortgage rates anytime soon. Still, that price appreciation in the Bay Area has continued regardless of what the interest rates have done. I'm always reminded by people who bought in the 80s, they're like, oh yeah, my interest rate was, some people 12 to 17 to 18, 19, 20%. Homes still sold, and over time, prices still appreciated. I'll leave you with this. Homes sell in every market. And in every market, there are opportunities and there are pitfalls. That's in hot markets, that's in down markets, that's in markets that are whatever in between. This is why I'm trying to stay on top of these trends and these statistics and just the zeitgeist of what's happening with the real estate market, so that I can be as informed and give the best advice possible to you guys and my clients and my past clients and anyone else that's interested. As I said, I think every single transaction that I've been involved with my clients has been centered around what is happening in their life. Prices were recently the highest that they've ever been. That doesn't mean that there was a ton of properties on the market of people trying to take advantage of that, because the timing in their life wasn't right. I want to be available to you when the timing is right. That's why 92% of my business is my friends and my family and my past clients and people that they've referred to me. It's based on relationships and trust and life, and that is the reason why I love my job. So, cheers. Here's to 2023 and whatever it may bring.